Hi all, this is Andy again. I'm talking with Mickey with Mercenary Geologist. How are you doing, Mickey?
I'm doing well, Andy, and you?
I'm doing very, very well. And for our viewers and listeners that want to find you and see you, they can find you at mercenarygeologist.com. And Mickey, what is your Twitter handle?
At Mercenary Geo.
And how many followers do you have on your Twitter handle?
Well over 47,000.
You have quite the following. Well, what really attracted me to you and why I wanted to talk to you is I think in this industry, we talk to a lot of people that are pitching, and you specifically have a background, an extensive background in geology. And so you're the guy on the ground typically and the science to all of this. And so I wanted to talk to you specifically about the markets in general, and then we'll go a little bit more ground floor about what you see happening. So let's start out with the industrial metals. It looks like the economy has been slowing, and copper's been holding somewhat steady, but a little bearish, if you would. But I'm surprised that copper isn't down more. Tell me what your thoughts are on specifically copper and the industrial metals.
So regarding industrial metals, it's all about copper, Dr. Copper. We've all heard the saying, and it is a leading economic indicator of the world economy. Copper's down. It hit a yearly low here a couple of weeks ago. Now trading somewhere around 380 on the spot price. But there's Chinese concerns with what I view as a cratering Chinese economy. China uses about 40% of the world's copper, and recession fears. So, especially copper, the industrial metals, the prices are in large part a function of the hedge funds and the commercial traders, what they see going forward. So there were something like a 7-8 year low in net longs, commercial traders and hedge funds a couple of 3 weeks ago in the copper market. So that's tended to knock the copper price down. I am a permeable on copper. We use something on the order of 25 million tons of copper a year. We are in a supply deficit, but most concerning is the future supplies of copper. We use well over a Bingham Canyon per year. Bingham Canyon is one of the largest porphyry copper mines in the world, and certainly in the US. And it started production in 1840, a continuous production. So we use that amount of copper every year, which means we've got to find that amount of copper every year, and we're not doing it. So long-term, very bullish on copper, medium-term bullish on the copper. I'm not even going to go there regarding short-term projections of copper prices because it's really in control of speculators.
Yeah, well, let's talk about that then, not short-term, but let's project. I don't even want to project a timetable. Let's assume that China works itself out, not so much that they have a booming economy, but let's say they stabilize within the next, which I think is something reasonable, within the next 6 to 12 months. Let's say the same thing with the US. And then we no longer have those concerns in the next 6 to 12 months. What's that going to do to the copper price? And might be a rhetorical question.
Well, and so you would suppose that the copper price will go up. I'm going to backtrack a little bit and tell you at 380 copper, a significant number of copper producers worldwide, let's say, is the highest quartile of price producers, are underwater right now. So eventually some of that production is going to come off. But once again, the copper market, and there's analysts, I know a couple in New York that I am in contact with on a regular basis, and we've all realized over the years that the short-term copper price goes up and goes down depending on what the hedge funds are doing. Hedge funds pour in, hedge funds pour out, and you've got The same thing going on in Shanghai Exchange in China. So reason would demand, if the economy gets straightened out, copper price will go up, but it's not always a reasonable market.
Right. And that's something, I guess, made me think right now, what you just said, is it, and not to say that this would happen, but you could see, or I could see it happening. It could be a big squeeze into copper sometime, where you see what it, like, for example, what nickel did in the LME.
Yeah, that was crazy.
Right? Wasn't it?
But that's a much smaller market. It's about
Sure.
8% of the size of the copper market on a yearly
Right.
basis.
Well, talk to me about the other base metals like nickel. Yeah. Talk to me about some of the other base metals that you
Well,
deal with.
nickel is basically production's controlled by about 5 major mining companies worldwide, and it is very sensitive to geopolitical issues. So the squeeze that happened in nickel last year, which essentially destroyed the LME's optics, if you will.
Good way to put it.
It was basically created by the fact that Indonesia and the Philippines went to resource nationalism, as they tend to do, and said, if you don't smelt it here, we're not going to sell it to you. So it created an artificial short. And then you had the guys coming in and shipping nickel that was a bag of rocks to the LME. And so that market is very subject to manipulation. I basically don't play any of the base metal markets or stocks that are solely focused on nickel, lead, zinc, unless they are integrated miners. And so
Right.
most of those are dominated by copper producers. So buyer beware, is what I would say about those sorts of things.
Right. Well, speaking of stocks, are there, as a sector, again, this has been beat up, but we do see the supply constraints and the coming demand, and maybe it's not there yet, or maybe it is. But it sounds like you would play this on the equity side, and specifically junior equity side. How would you go about evaluating a base metal company, if you would, or a copper company that you would be interested in?
Probably a copper specific, copper focused. So in the junior space, so we're talking about companies that at the top of that junior space would be advanced explorers, developers. So you want large high grade deposits in geopolitical jurisdictions that are amenable to midterm development. So I own a couple of those. They have, in particular, one especially not done well. And a lot of that has to do with what I call the old Biden administration. And it's the war on not only fossil fuels, but the war on domestic mining. And so in the last couple of years, Biden has killed, through regulation or bureaucratic fiat, if you will, 3 of the largest and maybe 4 copper deposits in the world, and certainly some of the highest grade trilogy metals got put on a delay. They rescinded the fully approved EIS to build the road in Northwest Alaska. That basically destroyed that stock. So, although I would say probably trilogy metals, perhaps at current price, which is about my original cost basis in the stock, might be something you consider. But I really think, and we saw this during the 8 years of the Obama administration, basically no mines were developed in the US. And it looks like that's the policy of the people in control of the Biden administration. I don't think that's Joe Biden.
Right. So you mentioned Trilogy Metals. Why do you like them specifically? And how, again, is it the geology that you see? Is it the team that they have in place? Tell me about that.
They have arguably the two highest grade giant copper deposits in the world. In the Arctic district of Northwest Alaska, they need a 200+ mile road to get out there to develop. And 99% of that road is on state lands, but there's a very small portion on federal lands. And Deb Haaland, the Department of Interior Secretary, basically is very anti-development, and they've essentially, along with a couple of small NGOs, have stopped that development. So it's on hold, but it'll happen at someday because it is, those two deposits are the best in the world, and we
It
need
has to
copper.
happen. Yeah,
It has to happen.
it has to happen.
Otherwise, either that or the world takes a step back, and
Yeah,
I'm not saying that's not going to happen either, but
yeah,
that's something might be worth playing.
got it. So you had mentioned offline that you have 30 years experience in geology. So when you go into a company and look at the company, and let's say you open up their studies or their studies, again, what somebody like, I'm not knowing, like, if that's me, I don't know what I'm looking at. What is there a handful of things that you look at when you look at their studies? Again, that's going to be like, hey, I want to dig a little bit more here.
Yeah, so I'm a fatal flaw guy, and I do have 30 years as a field geologist. A lot of that last 10 years of my career was a chief geologist for various juniors headquartered in Vancouver. But since then, in 2007, I put the word on the street I wanted to become a mining analyst, and a couple of months later, I had our first mining analyst job, and I launched a newsletter about 10 months after that. So for the last 15 years, I've essentially functioned as a mining analyst. So I still do site visits, but I'm not doing day-to-day geology. But yeah, so you look at for fatal flaws, you look at these studies. You're looking for a couple of things. You want, number one, I'm looking for things with economic studies. I want the net present value to exceed the capex. I mean, that's kind of logical. And you want a good internal rate of return. You want a discount rate that's reasonable. 5% not a reasonable discount rate. You need 8 or 10, and that's still probably low. But you see a lot of studies that have economic studies that have fatal flaws. So I don't know if you're one of the guys, but there's some guys who can look at a balance sheet and financial statement and go, this is wrong, this is wrong, and this is wrong. I don't really have the ability, so I rely on other people to do that, but I can look at a 4301 feasibility study, pre-feasibility study, and the bane of what they do now, the preliminary economic analysis, which is so much fluff, and start picking out fatal flaws. If it passes the fatal flaw analysis, then I'm interested, and then I'll go into other parts of the company. But for me, being a geologist starts first with the project, the flagship project.
Got it. Let me ask you this. Well, specifically, are there any other copper plays besides Trilogy Metals that you would be interested in looking at?
At this stage, none come to mind, but we do have 4 of the largest, highest grade copper deposits, 3 of which are in the mainland, the US, 2 in Arizona, really 2 in Minnesota, although it's kind of the same geologic terrain, but split by 2 companies. And they're going to be wonderful copper deposits when they are developed, but unfortunately, it's not going to happen, in my opinion, on as as the Democrats are in charge with their New Green Deal
Yeah. Which is interesting
agenda.
too on its own. It's like you have all these electrical vehicles and green energy, but
Yeah,
it takes base metals. It
well, it
takes
does.
copper.
It takes more copper to
Right.
build an electric vehicle, and because of all the electronics in an EV,
Yep.
and it takes a lot more nickel, and that nickel has to be nickel sulfate, which occurs in nickel oxide deposits in the
Right.
tropics and subtropics. So, so they talk about how they're pro New Green Deal, and we're going to do this and this and this, but then the so-called electric metals, which include nickel and copper and cobalt. Trilogy Metals has cobalt as a byproduct of one of their deposits in North. Then they ixnay, veto in any way, shape, or form in any way they can those kinds of deposits.
Got it. Well, let's talk a little bit about rare earth minerals. Yeah, what exactly are your thoughts? And the rare earth metals, I guess, would be like cobalt, lithium.
Well, no, the rare earths are things like cerium and lanthanum and dysprosium and europium. So
stuff I've never heard of.
yeah, those are the rare earth metals, and they're essential for a lot of application, very small market. Back in the rare earth element boom in 2009 to 2011, China controlled most of the world's production. That's now been remedied for the most part, but China still controls the chain, so the manufacturing chain, and so that will change. You know, we have good sources in the United States, good sources in Canada. The other metals, the minor metals, cobalt, lithium. Cobalt is almost exclusively a source of Central Africa, the the People's Democratic Republic of the Congo.
Of the Congo. Yeah.
Yeah. But we do have, and so that market is very small, something on the order of maybe 120,000 tons per year, as opposed to copper, which is 25 million tons per year. So those markets tend to be very small, but then again, we have significant deposits, mainly as a byproduct in the US, in Idaho, where a deposit has been in limbo for production of going on 20 years. We've got the Bornite deposit in Northwest Alaska. We've got Sheep's Creek in Montana. So we have those resources, but we're a long way from producing that. Lithium, the lithium market is controlled by two entities. Well, let me back up and say there are two products. There's hard rock lithium spodumene, which is a mineral that occurs in pegmatites. That is mainly produced in Australia. And then brine deposits, which mainly come from Chile and Argentina. Those are owned for the most part, not wholly, by three giant Fortune 500 companies, chemical companies, two US-based, Albemarle and Baton Rouge, Louisiana, and FMC. And so deposits are in Argentina and Chile, but those two players are part of the oligopoly that controls worldwide production, manufacture, and sales of lithium minerals. Three of those, I mentioned two, then there's SQM, a Chileno New York Stock Exchange listed company, and two Chinese entities. But these five companies are all in cahoots with each other. So they own pieces of deposits, they own pieces of the production. So breaking into the lithium market is very hard to do.
Got it.
There's one deposit in Nevada that the Biden administration, in conjunction with their new Green Deal, that's kind of their flagship, Thacker Pass, owned by Lithium Americas. It's a new kind of deposit in clays. They have just gotten funding through a partnership, and also the US government put that to build that plant. But the problem that I see, it's a bit equivocal if it's going to work, because I tested this new process at pilot plant scale, but they have yet to take that 2 to 3 orders of magnitude up to a production scale. So there will be fits and starts with Thacker Pass.
So we'll see, right?
Yeah, we'll see. Rest assured, I'm not playing Lithium America's stock right now. And I always go long. I've never shorted anything in my life, so I always find something to go long on.
Right. Yeah, a good story. Let's talk about the precious metals, gold and silver.
Yep.
Obviously, people usually invest in those because they see the amount of fiat that we currently have in the system.
Yeah.
Whether it could be, and that's not limited to the U.S. It could be, the euro. It could be China's printing more than we are. So, what are your
U.S. is just the best of a bad lot.
Right? Yeah, exactly. So, what is your really? Let's stick with equities in a sense. Is like, how would you play the gold market? You play with equities. You're evaluating a company. How would you go about evaluating a junior gold company to play that?
Same way I do a base metal company. So I've already talked about project, but when I'm looking at a junior company, I'm looking at 4 things. I'm looking at the people, the project, and the share structure. Not necessarily in that order. I look at the project first, but you want the right people, and you want to make sure they're not a bunch of sharks and charlatans and with Vancouver, live in Vancouver lifestyles, right?
Yeah. How do you figure that out? I mean, what's a good, do you call them on the telephone, or do you look at their LinkedIn or see what projects they've been associated with?
Well, I don't do LinkedIn but no, I have a big network, and I've been doing this for, I've been playing the junior market exclusively for, 31 years now. I've been doing it. So I have a big network. I've got brokers in Vancouver. I got a broker in San Diego, people that have as much or more experience as I have, word of mouth, previous track record. Meet the CEOs, meet the VPX, and look them in the eye and be a judge of people, and so sometimes you get fooled, but not very often.
Right.
Do I get fooled by that? So you want them to have a track record of success. They're all bill themselves as entrepreneurs and venture capitalists. Well, if their track record shows that they bankrupt 3 companies, then I would say you're neither anymore, and you're nothing but a scamster.
Right.
And there are plenty of those. I call it mining the stock market, lifestyle companies based in Vancouver, and they live in West Van in multi-million-dollar houses, and they collect a salary, and they spend most of the money they raised on G&A to support their lifestyle.
Yeah, I've made the mistake in investing in a few of those myself. You get your battle scars.
And so then share structure, want a tight share structure where the people that are the management have plenty of skin in the game. They participate in the private placements, so they are operating in their best interests, and therefore the regular shareholders' best interest. Tightly held. You want to look at the amount of money that goes in the ground versus the G&A every year. So you want a significant amount of that goes to drilling. And then finally, especially in a bear market, I will argue we've been in a bear market for the juniors since 2012. So we're in our 12th year of that right now. I don't see it ending anytime soon, but cash in the bank, or the ability to raise cash without further dilution to existing shareholders.
Yeah. So about that, so how much cash do you like to see in the bank?
Millions.
Millions. The more the better,
Yeah.
obviously.
Yeah.
Okay.
And so it takes, if a company has less than $1 million, that means they're not going to be doing anything much over the next year, because it's arguably going to cost you, I'm going to throw out a number, plus or minus $750,000 a year just to keep the lights on in the building. Yep. and pay the fees, associated with being a public company and the TMX, the Toronto Venture Exchange, or the Toronto Stock Exchange.
Let's talk about projects. And this is all of the mining company, or is there all of the different metals that you analyze? Is there a place that you, or I shouldn't say place, are there places you would not go to? So for example, a place, it could be North America for all I know.
Yeah, it may be.
Right. So yeah, is there a place
Depends.
Yeah. I mean, where are you staying out of? If somebody has a great project with high grade, they have millions in the bank, but they're in, someplace that's not stable or that you don't trust. What's a red flag for
Africa?
Africa.
Okay.
Yeah,
I've never played in Africa, and I have no intent to do that because of corruption, resource nationalism, coups. A couple of years ago, Burkina Faso was the new place that was, and then I had a coup, so Africa. I've gotten burned in Haiti before. There are green agendas, geopolitical concerns, and mining friendly companies in Europe, such as Sweden and Finland. Mm-hmm. They've been difficult lately. Generally, I speak Spanish, so I've focused historically in Latin America, Peru, Chile, but those countries now have left-leaning, if not absolutely socio-communist, in the case of Chile, regimes. So I'm less in tune. I still own stocks operating or exploring in, especially Peru. I lived in Peru for a couple of years in the late 90s. So it's tough, but historically, I would say I look at North America and South America, and I would include Mexico in North America. But the world's in a bit of a funky stage right now. We've got Trudeau, who I like to call Justine Turdo, but and he's all on this ESG, DEI, I prefer it to call DIE, DIE, First Nations thing. So it's becoming more and more difficult in Canada. I've already talked to you about how it's more and more difficult, at least temporarily, in the US. And Mexico is undergoing some changes in its mining law right now. So it's a tough game right now. But historically, my success has mainly been in North and South America.
North and South America. Okay.
In terms of picking stocks, and we have a unique sort of goal here. We're looking for doubles in 12 months or less, and then we sell half, so you take your capital out and call it the power of two. And I've written about this. Yeah, so you're doubling and retaining your base cash, and we've done very well on that. Hit on over 50% of the stock picks in 15 years.
Yeah, no, that's great money management. Let me ask you, so if you can, for our listeners or viewers, give your top 5 things that you would do with somebody just, again, starting out, or it could be somebody that has some tenure like myself, and I'm still learning, your top 5 rules of thumb in playing the juniors, whether it be industrial metals or precious metals? What are you looking for? Your top 5?
So if you're going to play in this game, I think you need a minimum, and maybe that's changed. I'm always going, you want to start with a minimum of $50,000, and you want to split your speculations. These are not investments, they're pure speculations. It's kind of like gambling, but it's like going to the casino. If you're good at cards, you play blackjack or poker. You don't go to the roulette wheel. You play things that you have the ability to skew the odds in your own favor. So,
Right.
Go out and find with your 50,000, 5 or 10 stocks. You'll hit on in a good market with good stock picks. You'll hit on a couple of them, and you get your 2 or 5 or 10 baggers, which will cover the ones you pick that aren't going to perform. And there certainly will be some. And then I think you want to find somebody like me. You want someone, a newsletter writer that has experience and has a track record, and talk to the guys that have been doing this for a long time and have good ideas. But I'll be honest with you right now, I started taking money out of junior stock market in the last run up in gold. So that was 3 years ago to the day, when everybody was in the feeding frenzy and putting money willy-nilly into private placement. I'm selling like crazy. And I had a really good year because I saw all this money. We raised $3 billion in this business. And I say we because I participated in some of those private placements, not very many. But when people and a generalist investor came in and threw their money at them, in 4 months, those stocks became free trading, and all the pros were in, and that included people like me and everybody else trying to get their money out. As soon as the price of gold cratered, stocks went down, and a bunch of retail speculators got burned again. So, but hook on with, and I wouldn't say do it with 1, 2 or 3 people in the business that have a track record, and they write newsletters, or they're pundits on business TV, and check them out, see what they do, look at their track record. If they have a good track record, then you might do it. I came in to this business and I started the website totally web-based. I was the first guy to have a totally web-based newsletter. In 2008, I started at the end of April of 2008, at the beginning of the financial crisis, because there were a bunch of newsletter writers who had made a bunch of picks and they got burned because of nothing they did, just the economy was cratering right before the global economic crisis. So I got in at the bottom. And you could argue that somewhere in what's going on in Toronto Venture Exchange right now, we're probably at or near the bottom, but we've been at or near the bottom for the last 2.5 years. So when it's going to turn around, but there's bargains out there. I've chosen to take money out. And so I've become conservative. Well, I've always been conservative. That's why we trade the way we trade, in a very high risk environment, high risk, high reward. So we apply conservative methodologies to our trading philosophy. But the point remains that you get in and near the bottom, and you have to be patient right now, because I really don't see the bear market turning around for the junior resource sector anytime soon.
Got it. Okay, if somebody has any more questions or would possibly like to add you to their network, or even work with you on picking stocks, how would they mention your website again and what's the best way for them to reach out to you?
Well, the website is mercenarygeologist.com. I am basically semi-retired right now, trying to wait this bear market out, and I'll come back in at some point. But I respond to all emails, contact@mercenarygeologist.com, unless you're a troll. And then
Yes, you do. You responded to me.
yeah, @mercenarygeo is the Twitter feed. That's a one-way deal. We do not respond at all on Twitter. We put stuff out on Twitter, but if you want to contact me via email. And I run a free subscription service, and I make my money through sponsorships by companies. Currently, I have 0 sponsors because I don't know what to do in this business right now. So, what I'm doing today, I spent about 30 minutes on the phone before our session was scheduled, and I'm talking to 2 brokers and 2 bankers, and I'm chasing interest rates right now. So I have a 90-day T-bill that expires on Thursday, and I'm looking for a better than 5% on my next T-bill. So I've gone more and more to cash and just collecting interest, trying to keep up in one way, shape, or form with inflation. So.
Yeah, right. Got it. All right. Well, I want to thank you so much for your time. We really do appreciate it. And I'll put all of that for our listeners and our viewers. I'll put all the show notes, all of your contact information in the show notes.
All right. Thanks a lot, Andy. It's been my pleasure.
It's my pleasure. Thank you.